Good morning, viewers. Welcome to ST Money's Morning Talk, your weekday business news. It's Tuesday morning, August 6th, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. The Dow Jones Industrial Average fell 1,034 points or 2.6% to 38,704. The S&P 500 lost 160 points or 3% to 5,186, and the Nasdaq Composite dropped 576 points or 3.43% to 16,200. The Russell 2000 fell by 70 points or 3.33% to close at 2039. The rout, which began in Asia, where Japan's Nikkei 225 tumbled more than 12% amid a surge in yen, was carried over to the Wall Street as investors unwound most popular trades. For years now, investors bought assets, especially the US stocks, and funded the trades with the yen. This was possible on the back of ultra low interest rates in Japan. Many hedge funds and money managers expected rates to remain low and the yen weak. Instead, the Bank of Japan increased interest rates by 0.25%, which in turn strengthened the yen. Investors who had borrowed yen to fund their trades have now been forced to buy more of this currency to satisfy additional collateral. That is pushing the yen even higher, prompting more margin calls. Investors are therefore selling their stocks to fund the margin calls. On the treasury side, the yield on the benchmark 10-year treasury note ended at 3.78%, down from 3.80%. The 2-year yield, which often moves with expectations for short-term rates set by the Fed, inched up to 3.88%. Remember, yields fall as prices rise. Investors are dumping the technology stocks that propelled the market to new highs this year. Each of the so called Magnificent Seven technology stocks declined at least 2.5%. Nvidia, the must own stock of the AI frenzy, lost 6.4%. As reported yesterday, Warren Buffett's Berkshire Hathaway has slashed its position in Apple during the second quarter, selling nearly half of its huge stake in the iPhone maker. This sent a strong signal to the droves of investors who look to the Nebraska based billionaire known as the Oracle of Omaha for signs of shifting market sentiment, as he sits on a mountain of cash of about $277 billion. Apple shares, which had withstood the tech sell off better than rivals over the past month, fell 4.8% on Monday. A senior portfolio manager has revealed that his firm is holding an unusually large amount of cash after selling down stakes in the large, fast growing companies in order to lock in gains and be ready to buy when the dust settles. So, my take is don't give up hope. Stay put and buy at declines. The market isn't going anywhere. See you tomorrow morning. In the meantime, let us know in the comment section what are your thoughts for the market. Happy investing, stay inspired, and remember it is all about money.